Spread betting, to buy or to sell. Amazingly, more than 90% of spread betting trades are buy positions. What could be the reason for this? Well, as we're frequently told, one of the key advantages of spread betting is that you can bet on the direction of the market regardless of whether it's moving up or down. Some possible explanations follow. Inexperience. Most retail active traders aren't comfortable being short. Shorting is not a natural psyche per se, and most beginner traders aren't comfortable selling something they don't own. If we take the typical demographic of spread bettors as high net worth male individuals with previous investment experience, their past investment experience may also have played a part in conditioning them to the act of buying only. Risk. Arguably, it is logical to think that shorting a stock is more risky than going long, as the upside of a stock is theoretically unlimited, but the downside is limited to zero. This would, of course, potentially subject you to unlimited losses, but the truth is that as the position moves against you, the spread betting firm will at some point issue a margin call and ask you to either deposit more monies to keep the position open or close the position. Tips. A quick poll of the major tipping press showed that approximately two-thirds of tips were buy tips. These tips by periodicals and magazines aren't targeted solely to spread bettors, but it is logical to assume that spread bettors also rely on these tips, and hence are perhaps 66% more inclined to go long. It is also interesting to note that city analysts almost never tell their clients to sell specific stocks directly. Personality. Another reason that most spread bets are buys could also be due to a far more fundamental personality trait. Psychological research has shown that optimists are less likely to guess a probability of an occurrence correctly, whilst pessimists are more accurate, estimating closer to reality. The theory also suggests that if you're a pessimist, you can envisage the movement of a market in a negative direction to a greater extent than an optimist, so being more inclined to sell positions. But by the very high risk nature of spread bettors, I think we can predict that the vast majority of traders are optimists. But sadly, research has shown that 80% of day traders lose money. For more information, visit www.financial-spread-betting.com.